Our topic, China markets are their opportunities. Framework of the next 30 minutes or so that I will be sharing with you on this topic. Do note that the market itself, its prices and its behavior will give us clues where it could be heading in the future. So we can look at the analyst report, but I think the more important thing that over the last many years that I experienced is that, in fact, if we look at market a little bit more dearly, understand the price behavior, it should also give us some idea, some clues where it is heading. So that was the first two series. We talked about it, and it was so popular that we used that the price behavior to understand the future development could be for Singapore and the US market. And I'm going to give you a very brief recap of what we have covered the last two sessions. And importantly, I think today we're going to use the same strategy or techniques, you can call that. We're going to study into the China market, where I would classify that as a value stage. In fact, we have passed the value stage. And then after that, during the whole program, the next 30 minutes, we're going to look into the case study of what we understand, what they mean by value stage. We're going to have a look at the actual market of the China market with some example on the Singapore market as well. So in conclusion, after we understand some framework of this knowledge, we're going to restudy back into the China market. Are there opportunities moving forward? And this year, 2022, seems like it started with, yesterday was the second trading day of the year. And it seems like there's some volatility that's happening in the US market. And will that affect the Asian market? We're going to study that in a short while. Now, disclaimer, so our mission is to create lateral thinking skill for every investor and traders, equipping them, knowing when to take a calculated risk or even a bolder risk between a market danger and opportunity. So today we're going to study into about US market, Singapore market, and also China market. Where is the danger and where are the opportunities? So what presented here, it is not a recommendation. So please consult your licensed financial broker or advisor. Now, let's go and recap on the US market, what we've covered. And to understand the price behavior, we discussed about generally in all the markets, as long as there's a tendency that is going to enter into growth, that usually there'll be four stages it will go through: income, value, growth, and decline. So we do a case study on the Apple shares. And in the growth market, because in the US market, the big companies or the mid-sized companies do generally consider all the US market are currently in its growth stage. And in its growth stage, there are three stages as well. Now, what are they? They are the beginning stage, maturing stage, and the euphoria stage. And this is Dow Jones chart. And what we discussed was that since after the pandemic started in 2022 of March, somewhere in January or March 2022, the whole market have entered into a euphoria stage. So I mentioned that don't be too concerned about it has to be a 75-degree, because sometimes when we expand the chart or we contract the chart, the angle will change. I understand that. So what we should do is that look at the previous trend. The previous trend, if we could see that it started somewhere after the Lehman crisis, and the previous trend was generally quite linear. But the current trend, you compare to the previous, it was quite steep. In fact, it's much steeper. And we could classify that this bull market is euphoria. And we discussed about the strategy where we witnessed that the market is euphoria. What should you do being a long-term investor? You've got to be nimble. You try not to be passive. Means that I'm always very concerned that if you're going to start investment here today in the US market, that means you have never invested before, but because of the draw, the market is so hot, it's natural. It's very natural that we'll draw to the US market. And if you're thinking of start your investment today and you're going to hold it for long term, then as a long-term investor in a bull market, a euphoria stage, you just got to be a bit more nimble. Do not be passive. Try to understand the market a little bit more if you could. And at this moment for the US market, I was still pretty much bullish, but what I do is that I will focus more on the trading aspects for the US market. And a recap on the Singapore market. What we studied that for the Singapore market since about 2008 after Lehman crisis, over the last 12 years, as you could see here, was it 12 or 13 years by now, it has been doing a range-bound market for the last between the price of 2005 and 3005. So during that segment, so if you have the time later on, you can visit back the YouTube channel that we have that is being posted there, that also study about, explain to you why Singapore market has been doing a range bound in this range 2005 and 3005 for the last 12 years. There's a fundamental reason behind it. So remember what I study is that we study the structure, but we also have to have a reasoning or proposition that to back up the structure. Why is it range? So everything will make a lot of sense. So tonight, our focus, of course, is to study in the US market. And being a range market for Singapore market is not a bad thing. So same thing, we cannot afford to be too passive. If you're going to start investing, say, for this STI in year 2010 at 3,000 points, and today is still at 3,000 points about there, you'll be very frustrated. But if you understand that Singapore market is at income stage, is a range-bound stage, then you'll recognize that it is, in fact, it's a range market. And in this range, over the last 12 years, mainly you could see that there's a 3, 4, 4, and now there's a half-year 4 cycle there. And what we could do is that in a range market or income stage, that's how Singapore market is, the DNA. Then what we should do is to always focus on the range, around the range low, no matter what the situation is, as long as the fundamental of the stocks is with good intrinsic value of quality, do be brave enough to pick up some. Then around the top, fundamentally, if not changed, the STF, the constituents have not changed much, then you should also be determined to release some of your shares as well. So that's how you handle the income stage stock market. Now let's look at the China market because that's our topic tonight. And still remember the mapping technique that we talk about. In most, if not all, the markets and stocks, there are 4 stages: the income, the value, the growth, and decline. If the company are not careful, they do not keep up with times, it may enter into a decline stage. Now let's look at the China market. And I suspect the China market have passed the value stage not too long ago, and now is in the making of a growth stage. Now, of course, I'm not referring to very short term, what happened over the last few months, or even not within the last 12 months. I'm looking at the longer term picture. So basically, when I define about being a long-term investor, my idea is, even for myself, it got to be 3 years or more. The time horizon, it got to be 3 years or more. Now let's look at the China market, where I posted that. I wrote a blog about it, and I also have posted that on my Facebook page as well. Now that was, I started investing in China in somewhere around after July 2016. Now, why is it so? Is based on what we've shared tonight about the structure, to understand the structure. And later on, I'm going to explain to you also to come in with the proposition, the reason to support this understanding. And all of you can do the same as well. Now, we could see that this blog was posted on the 28th of July 2016. And looking back in history, I could see that China has been in a range bound in an income stage for relatively good few years. Now, I'm looking at the benchmark of China A50. Why China A50? Because A50 measures the blue chip stocks of China, the top blue chip stocks. So it kind of gives me some idea where the blue chip stock is heading, the general health of the China stock market. So it gives me the idea. Now, so there was income stage. And now do remember that I posted this about 5 years ago, July 2016. And I already witnessed that there was an income value stage. Now, what is value stage? It means that it kind of break away from the income stage, from a range. It means that there must be something that's happening. So now I was back here in Singapore. I remember that I just came back from Hong Kong. I did a presentation in Hong Kong. So I came back, I felt so inspired. So I wrote a blog and posted on my Facebook page. Now, looking back, as we could see that it depart from the income stage, and there was a time of volatility. It went all the way up and also came all the way down as well. So what support the somewhere in November 2015, what supported the market then was, November 2014. It was because of Hong Kong, Shanghai Connects, and as well as Hong Kong, Shenzhen Connect. So for the first time in the history of China, after November 2014, foreigner could invest in China stocks through Hong Kong. So now we could see that at a point in time, the market ramped up a lot. Now, what caused it to also move south very quickly? The reason is really funny here is that it was due to the exchange. The platform could not cater to that volume. So it introduced a circuit breaker and the whole market got confused. What is circuit breaker? So it caused the market to come down really fast and fierce. But after that value stage, what it speaks to me is this. Now, remember I say that we understand about structure, where we understand about income, value, growth, and decline. But let's also include the reasoning, the proposition, why it has entered into a value stage. Now, from what I see back then, it was this. Now, when the gateway is open, I could see there's a flood of money poured into the Chinese market. That's not that's what I observe. And it is a good thing that I could see the interest of the global investor pouring into China. Now, the reason for it to come down is because of very technical issue. And from that, I begin to understand that maybe there's a trigger point for China market to enter into growth. Now, I written about this. If you can look at the writing that I have on the right, I say there's three key reasons. So that was written some years ago. And one of the first key reasons is because of the cleanup of the corruption. And as an investor, I like it. So for a nation to move forward, back then China have this issue, and I think they're doing the right thing at a point in time. And times have passed. I think you have did them good over the years. Now, so as time passed, as you could see there, when they start investing in China, it was after income stage and after value stage. And I started into the fundamental. I kind of like it. I'll give you my reasoning later in a short while. But what's the future potential? I will also describe to you very, very shortly. So on the posting of 28 July 2016, thereafter, the market continued to move north. Yeah. Now let's look at some case study on value investing strategy. I will come back to the China market again, but let's go a bit into, because I believe that I'm addressing to mostly audience from Singapore. Let's look at the Singapore market. Now, who is iFast? iFast is listed in Singapore Exchange. It is one of the top performing companies in Singapore Exchange in 2021. Now, when was this? Now, I remember I did a class for Singapore Exchange as well. That was on the 22nd of June, 2020. We also discovered the same thing as well, that iFast at a point in time that was at $1.37. Now, let's look at how I define what is value stage. Remember, what I'm going to study here is the structure. Yeah. So the value stage I define as company or market that are trading significantly below its fair value as it is about to enter into its growth stage. Now, that's how I define what value is all about. It's not passive. It's quite acute. Something had just happened. Something have just triggered. A new interest have come in, and I have to support that idea, this structure, with a reasoning. We saw that it's income, that value. So that was a case study put up back then in June 2020. Now, what happened after that? The pandemic comes in at the same time, and iFast have entered into a growth stage, as you could see here in September 2020 or 2021. It went up to the high of $10.10. So that was, in fact, it is the best performing stocks in SGX. So now we understand the whole structure about income, value, and growth. That's what I see. And for the income to enter the growth, that initiative have to be sustainable. That growth, the initial growth have to be sustainable. Now I describe to you very shortly again. What do I mean by that? Let's go back to the China market again. Now we could see that, so what's my conclusion here, that China market are there opportunities at this point in time. Now, this is talking about the Evergrande stocks. It was posted, this article was posted just about last week on the 27th of December 2021. Now, the headline was, the world's most indebted property developer reports progress completion of homes, which I like it. Yeah, where we know the issue about Evergrande, but what struck me was that they're still able, and I think they're quite determined from what I see, that to deliver homes to those purchaser, those who purchase a unit. They are determined to deliver homes. That's what I see, and I hope that they can pull through this, because as an investor, this is important signal to me on the long-term growth for China. Now, I wrote a blog. I post on my I didn't write a blog. I read about this news, and I inflect upon this news, and I wrote a short insight on my Facebook page. So my Facebook page is my name, Konhao, Konhw, joined together. So if you could, you can like it. So now, I suspect that is this. Now, over last year, 2021, and China has been deleveraging on speculators at a lightning speed. That's what I'm seeing here. And I do not think that they are doing this for no reason. So I believe that they are doing this for a good reason. And over the last 2021, in fact, at the end of 2020, the wave started all the way to 2021. But this caused an upheaval among the indebted companies that we see. Now, as an investor, we have to look beyond. That's what I mean by lateral thinking, right? Now, what I'm seeing here is that I suspect that they're anticipating a global higher interest rate environment. Now, bear in mind that in 2021, what they do is that they are deleveraging on the speculators at the lightning speed. Why is that so? Okay. Now, the market watcher, as I say, or investor are monitoring this very closely. Now, this balancing act between the coordinated efforts between the government and the companies, what they're trying to achieve here is that those heavy leverage company, they are trying to, with a pending high interest rate environment globally, they will have a lot of headwinds. But before it comes, before 2022 or moving forward, the futures, there's an inflation, definitely. But with a higher interest rate environment, those companies that's heavily leveraged is not a good news. And as an investor, I know what they're trying to do here is that instead of being reactive, when the interest rates start to pick up, then they have measure, but they do it now, which is then in 2021. So what they're trying to achieve here as an investor, what I see here, that they're leveraging on all these highly speculative companies. So what they're trying to do is to achieve a soft landing, even right now. Do not wait until the interest rate pick up, then they do something. They want to do it quite soon, very urgent, in preparing for 2022. So that's my insight for the market. Now let's go back to the structure of things. What I say here is that the structure, what we have witnessed is income, value, and now it is growth. Now you have to understand this. The first point I have here is that China market, are there opportunities? The first point I made here is that for China stock market, it reopened on November 2019 after 1949. So there was an absence of a few decades. So the whole China stock market only start operating again or refresh again in 1990. Now, so I would say that the China capital market, equity market, is even younger than Singapore and Hong Kong. So at least we have our security equities market, capital market in the 80s. So we're 42 years of experience. But China market is only with 30 years experience. Now, it is very strange to me because Chinese market is one of the second largest economy, but yet their capital market, equity market is only for 30 years. So to me, there's still a lot of runway for them to develop. And they're inexperienced. I could see that. That was an example in November 2015 I described earlier. But I think there's a long runway for them. And based on the second largest economy in the world, but at the current standing, I believe there's still more growth to come. So that's my take here for the Chinese market. Like, remember what I say, you try to find a match between a structure and a proposition, a reason to support the idea. Now, the next one is that if you're going to ask me for long-term planning, when to start investing in China market for the long term. Remember how I classified long-term long-term investment means that it got to be 3 years or more. Now, I started investing in China somewhere in July 2016. It's more than 3 years. But what if about you have never have long-term plan for the Chinese market? But I believe that even for right now, moving forward, if you find that the growth stage is sustainable for them. Now, we discussed about the 2021, the challenges that China have. I believe that as an investor, it is a good thing. It's a cleanup. They have to get the fundamental right to stage for the next growth. The fundamental have to be right. The structure have to be right. The whole regulatory have to be right before the market enter into the next phase of growth. So as an investor, I welcome that. Now, that's what I see. If I'm going to start investing here, that means 3 years or more. Now, on my second point here, I state that the best time to invest for long term is this: around the value stage or at the beginning of the growth stage. So that's my projection for the Chinese market if it is continuous, if they manage it well. Now, so the strategy for growth stage is this. The third point I mentioned here is to buy on dips. Now, how does that work? Now, you could see that after July 2016, that was the first time I invested into Chinese equity. So I invested in Chinese fund because I do not know what stock to pick. So I invested in fund. So it's pretty rewarding. So now after that, you could see that the market do not just move one straight line, it's jagged, but we could see that there was the trend formed. This is what I call the uptrend. So generally, when the uptrend is formed, the dip, every dip, the new dip, it is a higher dip than the previous dip. So that is the uptrend for the Chinese market that I'm seeing. And the latest dip was in 2021. And that was the period where I think we all experienced, where the companies have new guidelines to follow. So that was a challenging time for the companies. But as an investor, we watch very closely. And that was a dip, a deserving dip that I'm waiting for. So do look out for it. Yeah. Now, so what are the common questions that I usually receive question from my audience is this. Now, the common question. Now, so you may ask me that, so Konghao, I kind of appreciate your insight on the structure, how we understand the structure, and also we have to bring in the reasoning of the proposition. Yeah. So then you may ask me this question: will China ever fall back to its income stage again? Now, can I say that as an investor, we have to be mindful that nothing is impossible. And as an investor, we always need to have a contingent plan. Now, I may have all my element to support my idea, but what if I'm wrong? So I have to be prepared that it may fall back to its income stage again. That means the initiative they try to push forward that somehow did not come to pass. So things may bounce back to its income stage again, maybe back to its about 10,000 range. It's possible. But looking at the structure and looking at what's happening in 2021, I kind of like it, although it caused a lot of volatility. But I know, I would say I know, but I kind of match the identity of the growth stage, that what they're trying to do here is to do a cleanup in the whole structure of the equities market, which as an investor, we welcome that because that will set a strong foundation of the growth that they may be entering into in the future. So that if you're going to ask me the next question, so Konghao, when you have invested in July 2016 and after, is your position still in? My answer is yes. So what I'm adopting now is to average up on my position. That means to buy on dips. For this time round, the dips, I've not taken any action yet. I'm still watching, and I'll make my decision when the time is right again. So also do follow my Facebook page. The Facebook address, the name that I have is my name, Konghao, join together. Every day I spend about 1 hour to read news, and it's always enjoyable to inflect upon them. Then since I already have some ideas about the news that I read, I waste no effort. So what I do is that I will pen it down on my Facebook page and share it to my followers and likes. Okay, so this was the Apple shares that I posted some weeks ago on the 14th of December. I find a bit suspicious. And what I saw here is that, yes, I recognize that Apple is on a climb, but what I could see here was also somewhere on the third week of November, there was an inverted hammer. And in the at the beginning of December, there was an inverted hammer. And on the 14th of December, around that week, I also see that there was a bearish engulfing body. Now, so all these are price behavior. Like I say, price behavior usually will give us some clues to what's happening to the market. So I recognize that the market is still a bull market, but what I could see here then, it was that I suspect there's some offloading of this counter as well. Although it's still a bull market, but with two inverted hammer and with one bearish engulfing body based on price behavior studies, I recognize that there's some offloading as well. So I'm still keeping watch. And the next, last night development was very interesting. And the next few trading days are going to keep watch further. But over November, December, in fact, the market has given us some clues over there. Now, so if you like what I shared today, subscribe to this channel, invest and trade with insight. And remember to turn on the notification bell so you will not miss any of my latest video. So with that, thank you so much for staying true and see you again very, very soon. Thank you.